Hello and a warm welcome to Personal Finance. I'm Gugulethu Cele. Joining me in studio is Adam Halper, a financial planner at Discovery. And that's to give us a quick refresher, because in the last 6 months, so much has certainly happened that it does seem as though our financial New Year's resolutions might have changed. Adam, always good to have you with us today.
Thank you for having me.
Thanks for making time. I can recall us speaking a few months back regarding, financial goals and objectives, and everybody wants to start 2016 off on a positive note, but interest rates went up, we had petrol prices go up, and then Brexit happened, and then my mother started panicking about her pension fund. So let's start there. Is the panic all justified?
I think it is justified to an extent. So you have certain cases where people are panicking for no reason, that there's no real reason for them to panic. It depends also on a more granular level who is panicking. So we look at the guys that are heavily invested in equities and that are heavily invested in very high risk type portfolios. They would generally be quite concerned. However, when it comes to financial planning, there are so many layers of protection around the wrapped products through Regulation 28, which is there to protect the consumer in this sort of situation. So
Tell us about Regulation 28, just in case there's some viewers who are not familiar.
So Regulation 28, it doesn't allow an investor to put, so back in the good times before the recession, we had people putting everything into high equity based funds, which were yielding very high returns. And everyone was a rock star because all of a sudden we were doing returns of between 50% to 70% per annum on funds that were very heavily equity based. We're talking maybe more than 10 years ago.
But that's high risk, right?
That's very high risk. And that's when you saw the tremendous losses with the recession. So what has subsequently happened is that I think it's the Financial Services Board that has put this regulation in place. It's either them or the Pension Funds Act. But the Regulation 28 is there to protect the consumer from putting too much in high equity or high risk funds.
Perfect.
And that's where, when you have a situation like Brexit, yes, your equity bit might be affected with the equities going down. I don't feel that in a wrapped product like a pension fund or an endowment policy, anything long term, it's another bump along the way.
Exactly. And I take it that's the overriding theme there, because this is for the long-term objective and not someone who's into day-to-day trading of the markets.
Exactly. So we're not looking to trade, we're not stockbrokers, we're financial planners. And whenever looking at long-term financial planning, you've got you look at, the key is obviously diversification, which every economist would say, diversify. But the long and the short of it is that we are geared for these sort of bumps. One thing also I'd like to say is that the world has also it is a very big thing in the world. Okay, Brexit is pretty large. But when we look at South Africa per se and our GDP and our economy, we are also very used to these punches every now and then, and we are very good at bouncing back.
Exactly. Yeah. So for the moment, don't panic, Ma. Your pension fund should be fine. But let's come back to something else that also takes place during this time of the year. It's July now, it's National Savings Month, and everybody's talking about encouraging South Africans to save. And as we know, we're not the best at doing such. But how do we rejig that conversation and even our portfolios in conversations with our financial advisors to say, look, maybe those objectives I set out at the beginning of the year haven't been achieved. What needs to take place now? Especially because it's so tough in South Africa. Rising interest rates, cost of living is a lot higher.
100%. So we have cases where people are committing to, the problem in South Africa is that our culture is not around savings. We're not, normally when a person has a promotion or earns more money, the first thing they look at is what sort of car they can get and what will they be pre-approved for a bond. And also a lot of the time we have banks giving pre-approvals, and well, when I say we, I'm saying the consumer will go to a bank, ask them what can I buy. The bank will say, well, you're eligible for example, up to 2 million. They're not going to go looking for a house for 1.1 or 1.2 million. They'll look for a house for 2 million. So we're always going to try and, that's unfortunately the culture. But what needs to happen, I believe, is again, diversification. So when you put in, I know we at the moment are offering through Discovery a very nice offshore product, which is a recurring dollar-based offshore product. You don't have, it's the first ever in South Africa. So you've got now a situation where you can put money in an endowment structure, which is a wrapped portfolio. It's an endowment structure with the rules here, which has been around forever. The difference is now it's pure dollars. So you can put money, build wealth in dollars versus rands, which is a tremendously powerful tool when meeting with your financial advisor.
Exactly. On those particular options, though, how do you decide, again, if that is the necessary fit for you? Because that goes back to the needs analysis, right?
Right, correct. So when we do a financial needs analysis, we'll look at things like, firstly, if you do have debt, we look at things like what is the highest interest you're paying. There are very few, in fact, I don't think there are any investments in this economy now that will give you a guaranteed return in excess of what you're paying on your credit card.
Sure.
So if you have credit and if you have debt, rather get rid of that before starting to save, generally. But of course, it all forms part of a balance. So even a home loan, you can't wait until you're bond free to start saving. So I think all in balance, and if you use the right tools, for example, the endowment is a fantastic way for your higher income earners to put money away in something that is going to be tax-free in their hands at the end. And I think that is particularly attractive when looking at the offshore options through Discovery Invest, also very nice. The particular thing, though, is obviously it's very financial needs analysis based. So everyone's got their own, there's no uniform solution. If you're looking to save, stick with look at the term, and also obviously look at what is your current position and whether you can handle that sort of commitment.
That also goes back to the overriding theme again regarding this long-term structure, because I think so often people think that once you do see a panic, perhaps you need to change your plan every 6 months, and maybe that's not the strategy that we should be implementing here, right?
100%. I think knee-jerk reactions with these sort of bumps are the worst thing. There's a reason why we have a long-term plan. That reason is that even if there are bumps along the way, and we have a situation like we had now in December, where the world literally panicked, well, our world panicked.
Yes.
In South Africa, I think that was a far greater shock, I would feel. I think in South Africa there was a far greater shock in December than it was, than Brexit now, although Brexit is a far more internationally impacting crisis for the markets, perhaps. The local, I think we are geared for these sort of bumps. And if you are equally invested, and through Regulation 28, you cannot have too much in equities. So therefore, your other asset classes, example, bonds are actually very attractive now with Brexit. You got cash, obviously, which is a very conservative view, and property as well. So UK property is also going to take a bit of a knock now. But if you are not directly invested in UK property, I don't think it's a concern for you. That's why, again, I say, if we look back, how does it really affect us? I think if you have a good plan in place and you've catered for such bumps, you should be fine.
Exactly.
Yeah.
Let's close off by taking a look at the short term and perhaps the next 6 months. We know it is savings month, and in December, South Africans would like to go on away on their holidays. But to make sure that they don't do so, making use of credit, and not to forget that, again, the ratings agencies will come forward and give us their review again on South Africa's economy. All of these things are at play here, Adam.
Yes.
Are there a couple of plans and tips and advice that you have that we can implement to make sure that perhaps the December bubble won't be too rough to handle?
It's a tough thing when you look at tips for December, because December is generally, people should plan early. I think that's a great idea. I think one should plan now. If you are going to be spending a lot more in December, plan. I think planning is key. And it's the holidays that cost the most are the ones that are not planned. And if you are going to commit to a long-term plan, clearly you need to cater for holidays, and you need to cater for the occasional car hire, and possibly more than just a Group B car, maybe something more. So I think as long as you cater for that, because you can't save everything and not live. So I think a financial planner's job is to unpack the actual expectations for that client. What do they expect in December? Do they want to go to Mauritius, or do they want to stay local? Those sort of questions should be asked. And also what's nice with saving is that ultimately we are saving to be able to go on that holiday. So as long as you're in the habit, and you're in that habit using the right offerings available in the market, there's no reason why you shouldn't be able to comfortably go on holiday and save at the same time.
Exactly.
And I think that's the objective.
Adam, thank you so much for your time. Unfortunately, we'll have to leave it there for today, but it goes back to that word that you always keep mentioning, planning. Sitting down and actually drafting that budget and having that honest conversation with your financial advisor, and again, sticking it out for the long term. A big thank you once more to Adam Halper, who's a financial planner at Discovery, for joining us this evening, showing us that even though there might be a lot of noise in the macroeconomic environment in South Africa and globally, but ultimately we need to remain calm and keep in mind the long-term objectives. But you can share your thoughts and comments with us at CNBC Africa using the hashtag Finance410, or to myself at Gugulethu on Twitter. Until next time, don't press that panic button. Goodbye.